morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. Welcome. For those of you new to our trading room, I'm going to give you a really quick overview of what you're looking at here. What we're looking at is the diversified trading system. And it's diversified because, well, we're essentially looking at the market from three different points of view. Here in the top left, we have the Hawk Micro Scalper, obviously the scalping tool. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This is the Raptor, and the Raptor is a combination of the other three trading tools all incorporated into one. The markets that I'm looking at here are the NASDAQ. I'm also following gold and crude oil, but please don't be shy about asking. I'd be happy to pull up any market that's of interest to you. Okay, so we just opened up. Let's take a look at what's been going on here in the overnight. We'll take a look at the Raptor. And you can see we've had a fairly substantial decline in the overnight. The London session opened right around here and really didn't waste too much time heading lower from there. And so here we are with the North American Open. This is going to look like a very big opening gap above here. The market left off yesterday around 41.60 something. And here we are starting at 41.10, so there's a big 50-point gap above there. Oh, before I get too far along here, I should point out you're going to see all these different signals. You're going to wonder how these signals work. Essentially, all the signals develop the same way. First, we get a warning dot. Actually, I should show you this one because here the warning dot and triangle printed on the same bar. First, we get a warning dot and an audio alert. Then when the signal is complete, we get a triangle and a hash mark. That means it's time for us to make a decision. And once the signal is engaged, you'll actually see this arrow print as well. We do look for, certain setups with the tool. So you're going to see some of these arrows and hash marks we're not going to consider because they're either not going to be in sync with the filter or they're going to be out of sync with the trend or something or another. But I'll explain things as we go along. So just waiting for the dust to settle a little bit here, I'll show you this particular tool. This here is called the Geiger Counter. And this is a very interesting tool. This is a tape reader, and it helps you make sense of the time and sales. You have a couple features here. You've got the histogram, which gives you the history of the time and sales, and you can see right now we had a big selling island right here, if you will, and the buyers seem to have absorbed it. But look at the second one, this spike in selling down here. The buyers were less prone to hold on to it, and that's probably what forced the market down here. We also have this dial that's you keep seeing flip-flop back and forth. What's interesting about this dial is when we see it pull hard over to one side and hold and hold and hold. Come on, get over there. See how it's chewing through those buy orders? That gives me a pretty good idea that the market may actually try to put in a rally here. So long as it's waffling back and forth or dead even like this, it tells you that the market is pretty evenly balanced. But if I see it pull and hold and hold and hold, not just touch, but you'll get the idea, then that will tell me that there's more buying or selling pressure. Right now, the needle is a little bit green. So again, that's suggesting there's a little bit more buying going on than selling. And that would make sense because we're here on the lows. This Geiger counter, by the way, is a universal tool. It's not unique to the Raptor. You can put it on any chart you want, whether it be a 5-minute chart or a tick chart or whatever, or one of these other DTS charts. So it's looking like, we'll go here to the Hawk Scalper first, and we're very much in a sideways range. I can tell because the Hawk, when it starts printing yellow bars, that tells us that the market is very indecisive. And I'm starting to think that we may see it try to get into that big gap this morning. We may actually see it try to reverse the overnight. So you see, here we had what we call a first micro-macro cross sell signal. This is a scalp signal for us. And essentially it occurs when everything is in sync. So we're looking for that on a lot of the tools as well, is for everything to be in sync. Let me find you a better example just so that you can see what it's supposed to look like. This one right here is pretty much textbook. This is a very high probability signal. It occurs when the micro line crosses the macro line. That's a thin one over the thick one. And then everything comes into sync. We get a signal, so we get a red signal. We have red bars, red trend lines, red filter. Everything is in sync. That's a very high probability sell signal. And you can see it had very good follow through from there. Versus the one we were looking at right here, I think it had enough to reach its profit objective. Let's see. Oh, look at that. It just kissed the profit target. Would have hit the break-even trigger, so we would have got out of here at break-even, but so close. Now we're working on what we call a green bar sell, which is essentially green bars with a sell signal. If this signal completes, the green bar sell is a signal that we can do a counter trend trade on. So I'm actually just going to set up for that possibility. There we go. We got the green bar sell. What I'm going to do though is I'm going to look for this signal to fail. I'm going to look to buy it. And I'm going to be a little extra aggressive on this one. I'm going to delete my profit target if it fills. This tool you're seeing me use here to place the orders, this is called the Trade Manager. This is a very important tool. I'll get into it more as we go along today, but the key feature here of the Trade Manager is that it controls my risk exposure. Never will my trade risk more than 2% of my trading capital, regardless of where I place my stop. And I'll explain that more. And then the other feature of the Trade Manager is that we've got 16 different stop strategies here to choose from, and all of them are fully customizable. I'm probably going to go here with the ATR strategy if we get filled to the upside. All right, let's see if they're going to try to fill the order here, the buy order. Oh, look at that, more yellow bars, and they're again printing at more or less the same latitude, which is a very neutral market. But hey, it's a demo room. I need to show you how this stuff works. Pimo is asking, hi, are the settings always so low as 6 and 8 ticks? On a lot of those are our default settings on the Hawk, and I think we're just going to fill here in a second. For as far as the futures are concerned, for 99% of the markets that you are trading, we will look at a 6-tick Hawk, an 8-tick Falcon, a 12-tick Eagle, and an 8-tick Raptor bar. And those are, I should point out, these are the indicator warehouse mean wrinkle bars, which come standard with the DTS system. The DTS will also work on time-based charts or tick-based charts if that's your preference. I actually really like the mean wrinkle bars. When Adam first showed them to me, I was a little reluctant because I was a 5-minute chart trader. And he said, no, Eric, you got to try these. And honestly, after using them for about a week, I was hard pressed or I wouldn't go back to my 5-minute chart because they're very good at showing you who is in control of the market, whether it be the buyers or the sellers. You can obviously see, where the price is swinging, where the support is coming in. Now, by the way, we're working on a first micro macro cross to buy. You see, we've got the signal all in sync now. In fact, I could adjust my trade and take it right there. I know that I've got the warning dot. I know the hash mark's going to print. See, the signal is complete now. We're all green. We've got green bars, green signal, green filter. And what I'm going to do here is I'm going to disable my break-even trigger and my profit target just so that perhaps I can show you how the stop strategies are going to work. Okay, so I'm just going to, you know what? I'm going to start with I'm going to keep my stop out of the way. No, that's not going to be far enough. Let's just see whether or not they can take out these highs. Getting above this high is going to be instrumental in making sure that the buyers can control this market. Right now, we're still kind of in no man's land, as you can see. But I've got my stops in a good spot below the low here. So if this trade does not work out, this is the place that's going to tell me, no, Eric, you are on the wrong side of the trade. Regarding the brick size, though, some markets need a minor adjustment. If you're trading the stock markets with the DTS system, you'll need to adjust your brick size because obviously if you're trading something like Apple or Google, 6 ticks is going to be a little bit too small. If you're trading the Forex markets, the standard settings seem to work well for pretty much all the Forex markets as well. And if you ever have any questions about a market that you're interested in, just shoot us an email and we can help you with that. So we're seeing a little bit of resistance here. I'm trying to just let the market get going here before I activate my stop. But I think we're going to see a little bit of a pullback here. Here we go. Come on, get up there. And I want to show you how the Trade Manager automatically rolls your stops. I'm going to enlarge it a little bit more. There we go. Let's go with that. So these blue dots that you see here, this is my stop strategy, and I'm currently using the ATR with a multiplier of 4. I can adjust it however I want, but for demonstration purposes, this will be just fine. Watch what happens when I enable it. So you see it's down here, my stop. Watch what happens when I enable the stop. Okay, so now it's printing. I'm going to accept it, and it takes my stop, and it will trail it according to these blue dots. So these blue dots show me where or how the market would have, how the stop strategy would have trailed my stop had I been using this particular strategy. Now, the nice thing about this is it essentially makes your trading hands free. Right now, I don't need to worry about this trade anymore. I can close that up and I can look at other markets. I can look at crude oil or gold or whatever else it is I'm watching, and I don't need to worry about this one anymore. But here, we're going to stay with it a little bit longer just so you can see how it's going to manage the trade. We're up here at the highs. Now we can anticipate a little bit of a reaction. I've also got this break even button, and we also have a auto break even function, which I've deleted. And what I'm going to do is, let's get this out of, oops, shoot, they tagged me just before I could get it out of the way. I want to take it out of the way so that we could see how it rolled a little bit more, but whatever the case. So that was the first micro macro cross that actually did get to our profit objective, even though I deleted that. Today looks like it might be the kind of day we want to maybe scalp. Yeah, Mo says, wow, that was fast. Obviously, the buyers struggling a little bit here to get some footing, and the sellers coming right back and giving them a whack on the head. Here's the first micro macro cross to the downside on the hawk. I should demonstrate here the falcon to you as well. This is the swing trader. And what we're looking at with the falcon swing trader is we're following this trend line. So when the trend line is red, we're looking to sell. When the trend line is green, we're looking to buy. And again, most times we're looking for everything to be in sync with our filter. So right now we've got a red trend line. So we're going to wait for a red signal to develop. And we're going to want that to be in sync with our red filter as well. So here you see we're getting the warning dots. And the signal is going to print right there. I'm going to take it just a couple ticks further below the low. You know, the hash mark is a suggested entry. If I've got the low nearby, you know, nobody says I can't offer up another tick and take it below the low. These lines that you see printed along here, this is the ultimate support and resistance suite. This is another add-on. It's universal. It will work on any chart. And no, they are not floor pivots, and no, they are not Fibonacci lines. These are a unique set of support and resistance lines. They're based on price action. They forecast the support and resistance for today's trading. And you can see now our signal is all out of sync. So we've got green bars, we've got a green filter, we've got a green trend line building here, so we can actually cancel that signal for now. Oh, if this comes back, we may get what we call a late filter entry signal, which is a high probability signal on the Falcon. The late filter entry, let's see if I can find you a better one, just so you can see what it looks like. The market's been a little choppy of late. Shoot. Oh, here's one. Okay. Late filter entry occurs when the filter goes out of sync, comes back into sync, trend line never changes color, and then we print a signal. Very high probability signal. This one actually developed a little bit late in the trend. Normally they develop a little bit earlier, you know, somewhere around here. But still, it worked out. It hit our high probability target before potentially reversing. Oh, see, here we got another one, late filter entry signal. And I'm a little bit late getting to the late filter entry signal, but we'll see if we can't just toss that in there. I'm going to use the support and resistance line here to cover the position. We'll see whether or not the sellers dig in here. So you can see, you know, the trend line does not change color. The filter goes out of color, comes back into color, comes back into sync. Signal generates. That's a high probability signal. We may end up floundering here a little bit, but the chances are that the market is going to try to head lower from here. We're producing another one. Now, if this one doesn't, okay, that one tripped. If this one doesn't have much follow through to it, and again, I'm going to delete the break even and the profit objective. just so that I can try to show you how the stop strategies trail. And again, maybe we'll go with the, let's make it a little bigger. We'll go with the ATR. What I was going to say though is if the second one would fail and start heading higher, then that's actually a little bit of a sign of weakness, because this is a high probability signal. We expect it to have a reasonable amount of follow through. Come on, get going. So it's looking like the seller's trying to hold the market in control, and in fact, I'm going to give them a little bit more opportunity here. And we're going to go with the swing high-low strategy, just to try to keep it above this swing high. There we go. They're starting to sort things out now. Let's see. I can also tell you about the dynamic equivolume bars. You probably noticed that some of these bars are pretty thin and some are a little bit thicker. This is another feature from Indicator Warehouse. Again, it's universal. It will work on any chart style. And I'm going to hold my stops here just for a moment, folks. I'm going to take them back here. Just hold them for a little bit. The dynamic equivolume bars, if you haven't heard of equivolume charting before, what it does is it shows you a volume relative to the bar. So the fatter bars tell you that there's a lot of volume. The thin bars tell you that there's very little volume. Now you would have thought that when the market is trending, the bars would be fat, but no, it's not. There's actually very little resistance to a market that is trending well, and hence you get these thin little bars. So whenever you're in a trade and you see these thin little bars, you can be pretty confident that the market's going to keep trending. And yet when you get one of these big fat bars, you're always going to find those when the market starts to find support or resistance and starts to turn. In fact, one of our members pays particular attention to those fat bars and will buy or sell accordingly. So you see we're getting a little bit more volume on these bars here, suggesting there's a lot of buying and selling pressure going on. And again, I can use my Geiger counter for that. See, I want to see that wheel pull over here to the red side and hold. I'm not real keen on seeing it hop over there to the green side and hold. That would tell me that there's a little bit more buying pressure coming into the market. And we are getting near the top of the hour as well, which is typically when we see the buying or selling of the session halt. But we'll see if we can't take it a little bit further. I think, we're almost to our high probability profit objective. We would have hit the break-even trigger. But again, I'm going to try to give this trade a little bit of elbow room. See if we just can't sneak a couple more ticks out of it. Come on, get down there, you stinkers. All right, well, that one is perking away. Let's take a look here at the Eagle Trend Trader. The Eagle Trend Trader, obviously designed to pick up trend signals. And with the Eagle Trend Trader, what we're really focusing on is this band. This band gives us our directional bias. You also saw this band on the Raptor. No, it's not an Ichimoku cloud. It's unique to the Eagle, and it gives us our directional bias as well as helping us generate buy and sell signals. Whenever the market encounters the hard edge of the trading band, this is what we call the hard edge, we anticipate a reaction. And in this case, we generated what we call a green bar sell, which is a very high probability signal with the Eagle. And you can see that had very nice follow through on it. and the market progressed lower, generating a couple secondary signals along the way until we kind of hit this retracement mode again, and we encounter the hard edge. Lo and behold, another green bar sell, actually two green bar sells printing more or less at the same price, and then the market continues lower from here. Now, it looks as though we're probably on the second leg of this move, which could cause the market to either go sideways or maybe even make a little bit of a bounce higher. So if you're short on this Falcon trade, you might want to start getting a little bit more aggressive with your stops. It looks like the market may try to put in another rally, in which case we're probably going to see the market bounce. So once it gets down here, I'm going to get much more aggressive with my stop strategy. Perhaps go with the bar high low. Which is one of our most aggressive strategies. Yeah, okay, I'm just gonna allow it here to this 4100 area. If it fails there, we're probably gonna see it head higher. Because things are slowing down here a little bit. The buyers are getting a little bit more aggressive on us, and you can see we're working on a trend change signal now to the upside. This is going to be the last chance now for the sellers to force this market down. If they fail here, the buyers are going to take it away. So what I'm going to do is I'm going to go with the bar high low strategy. Hopefully this bar is going to finish on the low, and good. I'm going to accept the strategy. And now what I'm going to do is I'm just going to trail tick. I'm going to leave it 2 bars back and essentially follow the market down tick for tick. Actually, I'm only going to give it 1 bar. I'm going to be really aggressive here. Time for the sellers to put it in gear or give it up. Come on, get down there. This green trend line is giving me pause. You see, that's telling me that there may be a trend change coming. We are starting to make slightly higher lows relative to the other ones. Of course, if it makes a higher low here, that's why I said the buyers will pretty much take the market and try to run it. Well, it's hard to say how high. Whether they're going to try to get into that gap today or not remains to be seen. This bar right here that we're watching is a real tug of war going on. The buyers have it for a tick, the sellers have it for a tick. I think whoever wins this bar is going to take control of the market one way or the other. And again, I'm being a little extra aggressive with my stop. Here, we'll give it there. See the width of this bar? This is the one, that big tug-of-war bar that was going on. You can see all the volume that was associated there. There's a lot of buyers looking to step up to support this buying, and a lot of sellers defending their sell positions as well. So now if we take out these lows, there we go. The buyers are going to try to fight it back a little bit. And are we going to be able to ride out the swing? No, but that's okay. We got out with a little bit of a profit there. The market a little bit choppy at the moment, but still it was not a bad trade. Here on the Geiger counter, you can see all that selling activity that was going on. That, pardon me, that spike in selling. And then the market trying to recover a little bit. Oh, see, the buyers trying to fight it back. We might get a soft edge buy signal out of this yet. I don't know. I'm a little bit on the bullish side today. Don't ask me why. It's just kind of feeling that way, like we should see a little bit of a retracement before the sellers try to knock it down again. Not as much follow through, right? We had this nice big move, and now all of a sudden we're starting to drift sideways. It's giving me that impression that either they're just going to flat out channel, or we're actually going to see a rally. All right, so you see how the dial pulled over here and held for about 2 or 3 seconds? That's showing you that the buyers are starting to chew through some of those orders. We actually got a soft edge buy signal right here. Excuse me. The soft edge buy occurs when you get this little itty bitty test of the extreme. So it's essentially a retest of the low, and then the market starts to move higher. There's our signal that developed. It's since tripped, but we're anticipate that the market's going to hit the hard edge. So we're going to anticipate a move here to the 4100 area. But I'm not liking this sideways drift, let me tell you. Okay, we're generating another warning dot. I might take a look at buying this one. Now, the tool I'm using here, this is slightly different than the Trade Manager. This one is called the Trailblazer. And the Trailblazer, the primary difference between the Trailblazer and the Trade Manager is the Trailblazer is a one-click entry system. So you can see I'm just going to hit the buy market button here in a moment. Well, you know what? I can do it now. We don't have the completed signal just yet. We just have the warning dot. But let me show you how this works. If I hit the buy market button, I get my orders. See, I've set up 2 orders. I've got one order with a 20 tick profit target. I've got another order with an open profit target. And, oh, I haven't enabled my stop. And I get my stop all automatically, all with just one click of the mouse. The Trade Manager, remember, has the trade management component to it where it controls my risk, but I need to click and click my stop loss and then submit the order. So it's a little bit, well, not more involved, but if you're trading a really fast market, the Trailblazer has certain advantages, right? Because it is a one-click system. So we're actually still printing our warning dots here. We don't actually have our buy signal just yet, although I suspect we're going to see it here in a moment. If they get above that 40.98 3/4 high. But again, it's a demo room, so I'm demoing. I just heard the order fill, I think, on the Hawk. Yes, we did. So our first micro macro cross signal here to the upside. And again, the market's kind of working it. We got that downward move, the sideways drift. Now we're going to try it to the upside. Hopefully we'll get a little bit of a move here. And there we go. We hit our auto break even trigger. So you saw the trade manager take my stop from down here, roll it to the break even +1. And we also managed to hit our profit objective. Now on our Raptor trade, it seems like we're doing pretty well. We also hit our first profit objective. And again, we hit our break even trigger. So the trade manager took my stops from down here, rolled them to break even +1. And I can set that whatever I want. If I want to protect more profit or less, I can do that also. I can even do negative break even. So very sophisticated little tool there. And let's see if we can ride out this little bit of a swing. As it looks as though prices are going to try to get up there a little bit. Oh, well, they looked back just a little bit too far and tagged me at break even, but you get the idea. If this is going to progress a little bit higher, we're going to get our what we call a cloud crossover signal in the Raptor, which is also a high probability signal. So that's what I'm going to be on the lookout for next. Getting a trend change signal here in the Falcon, and possible hard edge bounce here on the Eagle. So a little bit of conflict in the signals, but that's to be expected if we're anticipating a trend change. Lots of sideways waffling. I wasn't anticipating the bars to drift back into yellow bars. Not entirely sure what they're waiting on. Okay, so we got another retest of the low here with the Raptor, and we're printing another buy signal, which has just tripped. So again, we're looking for a little bit of a pullback. We've retested the lows. We're producing a buy signal. This is what we refer to as a soft edge buy. And again, I'll enable my stops. And we'll see if we can't get a little bit more out of this one. Last one was okay. We hit our profit objective as well as our break-even trigger. So took profit on one, hit break-even on the other. Now watch what happens as we get closer to these highs. We're going to watch this Geiger counter and see whether we don't see the buyers start to chew through those orders. Okay, here we are on the highs. Oh, look at that. Oh, the sellers are coming back too. No, come on, buyers, get over there. Get over there, chew through some of those orders. So you can see our break-even stop is enabled. There we go. That's what I want to see. Pull it over and hold. Come on, get over there. There we go. All right, we're going to see a little bit of move now to the upside as the buyers chew through those orders. Come on. There we go. Oh, I don't like to see it pull and hold to the downside. That's the sellers coming back in. We did hit our high probability target, profit objective wise. Come on. Get up there, you stinkers. There we go. Get over there and hold it. Here, I gotta manually pull it over. There we go. And hold. Come on. No. Too much of a conflict here at the moment. We may end up seeing this market just go sideways from here. That should have had more follow through to it. All right, well, a couple of good trades on the Raptor anyway. Took some profit on those. Unfortunately, the trailing stop got tapped at break even. We had that profitable swing on the, or the scalp, pardon me, on the Hawk. So not a bad morning overall. And here come the sellers again. Crude oil inventory will be in about 15 minutes. A lot of times what we do on inventory day is we'll play with the OCO function, which is this one right here. One cancels other. It's essentially a bracket style trade. And what I like to see, I'm looking at crude oil here on the Falcon, but you can do this on any of the tools. What I'm looking for is a well-established trading range. One that I can bracket. So I'm looking to, buy above or sell below. Right now, the market in a little bit of a downward drift. And no real range to speak of just yet. So we'll revisit this in a few minutes. And I'll put my Geiger counter on that chart also so that we can see the time and sales unfold. Yeah, the market very, very sideways here at the moment. I still believe it's going to be a little bit more bullish. Here we go with yet another buy signal on the Raptor. And again, we're holding these lows, so we can anticipate a move toward the high. Well, I'll enable that stop, but you know what? I'm going to pull it down here below the morning low, just to give it a little bit of room to start, and then I'll adjust it as the trade progresses. come on. Sideways markets, people always ask, what's the best way to trade a choppy market? And really, the best way to trade a choppy market is not to trade it until it gets outside of the chop. So what do I mean by that? Well, if you've identified that the market is moving like this, if you're really aggressive, you can try to buy the bottom end of the range and sell the top end. But the best course of action is to let the market get outside of this trading range, retest it, and then look for that signal right there. Same thing to the upside. If we break out to the top end, let it get outside of this range, retest, and then look for that signal. And the system will generate a signal for you. It's very rare that the market conditions are such that you're not going to get some type of signal here. But right now, it's going to be a little bit difficult trading as everything remains kind of choppy. But the buyers, all the buy programs, they were defending the lows here, so we can anticipate that it's going to try to get up to the highs. And as it moves along, if we can finally catch a little bit of a trend here, I'll be able to show you perhaps one of the more aggressive strategies like parabolics maybe. They're always great in this type of situation. Actually, I may even go to parabolics right now. So you see how the parabolic strategy is a little bit more conservative to start on the trend, and then as the trend begins to weaken, the stop strategies come in very quickly to try to protect more of your open profit. And as we get higher, as we get closer to these highs, again, we're going to see the Geiger counter. We'll watch the Geiger counter to see whether the buyers or sellers are trying to get through that resistance level. If there's going to be some upward momentum to it or not. Right now, my objective is just to stay out of the way. Nuts, I'm going to have to move it again. See, it was very balanced there for a moment. Most of the time, the Geiger counter has been very neutral. But that's what I want to see. I want to see that wheel pull over there to the buy side and hold, and hold, and hold. There you go. Oh, come on. Come on, you buyers. You sons of buyers, get up there. Well, it's not looking very promising here at the moment. As the sellers put in a lower high, this is going to be the last chance for the buyers now. It's going to be put up or shut up time for the buyers. If they cannot defend these lows, if they cannot rally the market from here, then we're probably going to see it head lower again. And of course, if they can get it above these highs, well then we're going to see a rally. We'll probably see it rally, well, at least back to the high of the morning here at around 41.15, 41.16. So very, very important zone, if you will, for the market. Nope. Sellers are going to try to push it to the bottom end now. Oh well. Not a good day for demonstrating. It's very, very sideways today. All right, let's pull crude oil over here for a moment. Here's crude oil now on the Falcon, and we're about 9 or 10 minutes before the inventory report. And what we're looking for here is a type of range that we can bracket. Now, we're sitting on the primary support level. That's this blue line. The primary support, the median line, and the primary resistance tend to be the three strongest lines in your support and resistance suite. If we break above or below here, we'll probably see some follow through, at least for two zones. We breached here ever so slightly and then kind of recovered a little bit. But if we do break to the downside, we'll probably see crude oil fall off to 29.78, 29.80, somewhere in that area. If we see it rally, we'll probably see it move two zones here to the 32.13 to 32.15 range. All right, so you heard it here first. But not really much of a range that I can sell or buy, or bracket, I should say. But you know what, for demonstration purposes, and don't follow me in on this trade, because what I would suggest is when the market's moving like this, that we let the inventory report hit the floor and then watch how the market reacts to that. After about a minute or two into the trading, after the report release, we'll probably find a range that we can bracket. But to demonstrate the OCO function, you turn on OCO, so when it's blue it's on, and when you toggle it off it's gray. And instead of using the trade manager component to place your trade, you're going to right click on the chart and you're going to enter your bracket order. And let's say we'll use the median line for a buy. Now the thing to remember about these orders is these are live the moment you put them on your chart. So when you put them on your chart, very often I'll put them away from where I want them to be and then I'll drag them in. We're also going to want a stop strategy in play. Don't want to be trading crude oil without a stop. All right, so we'll go with the ATR strategy, and I'll dial it back a little bit. We'll make it a little bit more conservative. Or I can go with something maybe like the chandelier, which is a fairly conservative stop strategy. What I'm looking for here is I don't want the stop strategy so tight that it's going to get whippy on me. So right now we're trading this as our trading zone, and the market is more or less in the middle of that. And what we'll look for is we'll look for a breakout higher or lower. So we've got a couple minutes yet before inventory release. Oh, a reminder, Adam just told me there's a leap year special. And to check your inbox after the trading room today, if you have any questions, you can email him about it. But he has a promotion going on. So if any of this software is of interest to you, say like the Geiger Counter or the support and resistance lines or the DTS system, then this is your opportunity to take advantage of that. All right, so we're just waiting now on the crude inventory, which should be out in a couple minutes' time. Come on, and you'll see the Geiger counter go crazy here too as we get into inventory report. It's going to start flip-flopping back and forth. Come on. Okay, so the number's still fairly light here. A little bit of a bullish flavor, according to the Geiger counter. No real clear signal here on the Falcon just yet. You can see the trend line breaking up quite a bit, the filter breaking up. So very neutral as far as the Falcon is concerned. What's interesting is that a lot of times going into an inventory report, a lot of times I go to the Falcon just because the risk parameters and whatnot are a little bit more manageable. But it will actually produce a signal before the report is released, and it will, like 9 times out of 10, be an accurate prediction of which way the market will go. It just shows you how the underlying features in price and momentum come out in the tools even before the inventory is released. So the market is telegraphing what it will do if you know where to look. Thing I should point out as well is with the DTS system, what you see here is only on the surface. There's actually about a half a dozen algorithms for each of the tools working in behind the scenes to generate the warning dots and the buy and sell signals. So what we're doing here though is just a basic OCO order. We don't have a signal per se, although we're working on a possible trend change to the upside. All right, what do we got? We got about a minute left before the inventory release, and you can see the numbers here scaling down a little bit, and then you're going to see the volume jump. And there looks like they're trying to load up on the buy side, so is that just a ploy to trap buyers, or is the market actually getting more bullish? Are traders anticipating a bullish inventory? All right, the inventory release should come out any moment now, and you're going to see the Geiger counter numbers here spike, and the dial probably go a little bit nutty. Yeah, definitely on the bullish side today. They're anticipating a bullish report. And look at her go. Okay, so we've hit the break-even trigger, and look at that spike in volume. Just huge, huge spike. So I was anticipating a move up here to 32.13. Let's not get greedy. Let's just take profit here at 32. Or you can try to let it run out. Choice is yours. Let's see if this breakout actually holds. Remember I said that you can also let the inventory report release, and then we'll probably see some sort of range develop here. And then you can also bracket that range. So that initial buying, look at how that's tapered off. Was that just a fake out? Remember, you can always let your pocketbook be your guide. You got $200 in open profit here. Don't be afraid to take it. We're going to see if we can't finagle this a little more. Oh, don't tap me on break even. Oh, they did. They tapped me on break even. Well, there you go. Anyways, you see how the OCO function works. So another little cool feature of the DTS system. All right. So let's see what else we got going on. Oh, the market finally emerged out of the choppiness, kind of, sort of. And again, you can see all these yellow bars here. We're waiting on a first micro macro cross to the downside. So it does seem as though the sellers have this market in hand at the moment. Well, we're waiting for something else to develop because everything is just kind of sideways now. Yeah, not much going on. Let me show you here on the trade manager this risk component, how important it is. You see, what a lot of traders do incorrectly is they end up risking more than they can afford to lose. So the trade manager always will limit your risk to 2% of your trading capital. So what a lot of people will do is they'll try to keep their risk minimal by keeping their stop really close. But what they end up doing is they end up strangling their trade. So the market brings you in and then immediately reverses on you and stops you out for a loss before possibly heading down to your profit objective, right? How many times has that happened to you? And how annoying is that? Well, take a look here at my risk amount. My risk amount is $300. Now that's 2% of my trading capital. Yours may be more, yours may be less. I was working with a trader. He was trading a $300,000 account. Well, we didn't have to risk anywhere near 2% of his account. We were only risking 1/4% of his account. But if you're trading a $10,000 account, well, you're probably going to be risking maybe 3 or 4% of your trading capital to get a trade on. Generally speaking, anything less than 5% is considered prudent. But here's the point I'm trying to make. I've got $300 at risk with a very tight stop. But watch what happens if I place a looser stop. Let's say I'm going to go in the crest here on the macro line. Oh, my risk is still about $300. What if I risk it above this swing high right here? Oh, my risk, well, rounding errors, my risk is still about $300. But did you notice what has changed? It's the contract size, it's the position size, right? I've got one contract in play here. I've got two contracts in play here. And I had like 5 or 6 in play here, right? So the position size changes, the potential earnings change, but earnings are only earnings once they're realized, right? They're not earnings until you actually book profit. So trading is really much more about probabilities. Forget risk-reward ratios because, they're good on the surface, but you're going to have to incur a lot of losing trades before you get that favorable winner that's going to offset a few. Trading is much more about probability. What is the probability that if I place my stops here, the trade will work out versus placing, say, my stop above here or even above here? Well, intuitively, it should make sense that the bigger stop offers you a higher probability of success. Why? Well, because I've got this much room for the market to move around to try to hit this profit target. But don't forget, the risk amount is the same. The risk amount is the same here as it is here, or even here, right? The risk amount does not change. What changes is the position size, the number of contracts that I take. So what I'm trying to tell you is don't make your trade so tight that you get in and get stopped out and then miss out on a possible move. Give your trade a chance to work out. Indicator Warehouse has this cool little tool called the Money Expert. And let me see here if I can find it for you. Here we go. Okay, so this fancy little tool here, this is called the Money Expert, and you can play with this. This is a very educational tool. I think if you spend any time with this, it's going to be a little bit of an eye-opener. The way this works is the results are randomly generated, and they're all what I would refer to as your meat and potato trades. There's no real home run trades here where you get like $1,000 winner. These are trades where you're going to get, $100 winner, a $300 winner maybe. And most of us, being conservative, say if we're starting with $10,000, we don't want to be too aggressive, so we just end up risking a single contract, right? We're just going to trade onesies. And here's Joe trading his onesies, and he starts with 10,000, and he ends up running it up to $15,000 over 100 trades. Very well done, Joe. But how would he have done had he used position sizing? Well, I don't like curves like this, but mathematically, anyways, he could have run that up to $180,000. Now, I know you're saying, yeah, right, but here's the point. If you have a $10,000 account and your signal is only right 50% of the time, if you risk 2% of your trading capital, you can still make money. Now forget all those advertisements and stuff that show you, new trading system right 93.7% of the time. No, the way they do that to skew the numbers is they give you a very tight profit objective with a very loose stop. That's how they get those crazy win ratios. The truth is that most trading systems, you're going to perform anywhere from 50 to 70 or 80% accurate, depending on your signal and market conditions. So here you are with a 50-50 system, $10,000 account. You're only going to risk 2% though. This is the only part of this trading equation that you have any control over, right? You don't have control over your account size, well, to a degree, but not really. You don't have much control over your win ratio, but your risk, you have total control over your risk. Okay, so what happens? Oh, this is a curve that I like because this is very realistic. So Joe starts with his 10,000. He's trading onesies. He runs it up to about $13,000. So a $3,000 profit over 100 trades, which is very good. But had he used position sizing, he could have made $17,000. He could have made an extra $4,000 for doing nothing more than correctly sizing his trades. Let's try it again. Okay, this trade a little bit, this curve a little bit more dramatic, but still within the realm of possibility. And I should point out that the way this works is when Joe wins, you win. When Joe loses, you lose. So Joe had a little bit of a drawdown here. We also had a bit of a drawdown. So we both started with $10,000. After 100 trades, Joe is up to about $15,000. We took that same 10,000 and ran it up to about 25,000. Again, this is very much in the realm of possibility. Let's do this one more time. Okay, again, a very realistic curve. So Joe starts with 10,000, makes it to 13,000. We start with 10,000 and we get it up to about 18,000. And again, when he wins, we win. When he loses, we lose. If you click on the chart, however, you'll see the actual breakdown of the trades. So you can see that in here, here was a $250 winner. But because we used position sizing, we had a $500 winner. Here was a $100 winner. We had a $200 winner. The point is that all these things start to add up. And as the trade progresses, it becomes more and more influential on your account. So here's a $350 winner. This would be one of the bigger ones. But because we position size, that was a $700 winner for us. But you'll see most of these are just onesie-twosie type things. Oh, here was a big one. This was a $500 winner. So this is the type of trade that over the 100 trades you're going to do in probably 2 or 3 months trading, depending how active you are. So during that time, it is realistic that you're going to hit one big trade. And here's the one big trade. Joe hit it for $500, but look at this. By using position sizing, we made $1,500 on the exact same trade. That's the kind of thing that makes a real difference to your trading. Here's another $350 winner for Joe, but because we're position sizing, we made $1,050. Same trade, nothing special about it, but we're making more money. Now, the important thing to remember too is that when we're losing money, we don't lose more than we can afford because we only have 2% at risk. Now, here's the thing I like to do. What if we dialed this down? What if we only had a 40% win ratio? We're actually losing more than we win. Okay, well, here we're no better or worse off. Joe starts, our lines are overlapped. So Joe starts with 10,000. Looks like we're all finishing with about just a little more than $8,000. Let's try it again, though. Oh, look at this. Isn't this interesting? Joe starts with $10,000, wins a few, loses a few more, but he still manages to finish with about $12,000. Not shabby considering he's running a 40% win ratio. But look at what we did. We started with $10,000 and we actually finished with about $14,500. So again, even though we are losing more often than we are winning, we are still doing better than just trading a onesie. I hope this is a little bit of an eye-opener because I cannot overemphasize how important this is. Let's do it one more time because there's nothing going on in the markets. So we start with 10,000. Joe finishes with about 11,004. Now here we did a little bit worse than Joe. We finished with what, about just shy of 11,000, maybe 10,009. Not a substantial difference. So even though we lost, we did lose a little bit more. Looks like we lost about $300 more than Joe, but not substantially more. And you can see that when we win, it actually works in our favor. Okay, so here we're overlapping again. Aha, here we go. So Joe makes 10,000. 40% system, look at the swings. A lot of your equity curves are going to look like this. And you finish with, he finishes with 12,000. Again, we finished with 14,000. So when we lost, there was only about a $300 difference between us. But when we're winning more, right? We're winning about $2,000 more than Joe. Very, very important. Now what happens if we dial this up a little bit? What happens if our trading system is even a little bit better than 50-50? What if we're right, say, 60% of the time? Well, this is, again, where things start to get interesting. So you can see with Joe, we're lockstep, and then we start to pull away. Very important to note, a lot of people give up too early on something like this. They'll look at this and they'll see the logic behind it, and then they'll try it for themselves, and you know, their results are no different until you're about, look at this, you're about 60, 70 trades in, and then you start to pull away. So Joe made about $15,000, but you made about 17,000. But you'd have to stay with it for about a month, month and a half before you start to see any results. And yet, what do most people do? They'll try it 2 or 3 times. Oh, this doesn't work. And then they throw it in the corner and go try something else. Well, no wonder you can't make money, right? You got to stay with it. And unfortunately today, not a very good day for demoing, although it looks like we did get a little bit of a run up here. Oh yes, a nice little first micro macro cross signal there. That had very good follow through. Let's see, did we get a good trend change signal? Yes, we did. Here's a nice trend change signal. I haven't been able to show you one here on the Falcon. So here's the up, trend line changes color. Here's the down. That shows us the sellers trying to fight the market back. And here's the up. There's our buy signal. This is a high probability signal for us. We didn't get one of those earlier. You see the market was just waffling back and forth. But we finally did get one, and there we go. We got the good follow through. So unfortunately, you know, or fortunately, if we were trading this for real, we would just be waiting. We would be waiting for that high probability signal to develop, take the trade, limit our risk, and this signal performs at least 60% of the time. So then you have a situation where, oh, what happened to my, there we go. Then you have a situation where you can actually multiply your earnings by correct position sizing. Here, let's try it again. All right. This, again, a very realistic equity curve on a 60% win ratio. So Joe takes his 10,000, runs it up to about $17,000 over 100 trades. You take that same 10,000 and run it up to about 27,000. So it's all in the math, folks. The math does not lie. You need 3 components to be a successful trader. 1, you need a good entry signal, right? You need a reliable signal that you can count on, like the first micro macro cross here in the Hawk, or the trend change signal here on the Falcon, or did we get a cloud crossover? Yes, we got a cloud crossover here on the Raptor. That's one of our high probability signals also. Or here on the Eagle, well, here was a green bar sell. Actually had 3 green bar sells, 1, 2, 3, all in a row. Or perhaps this green bar sell up here, right? So you need your high probability signal. You need a way to manage your trade once you're in it. and you need correct money management. If you have those three components, well, you'll make money. It's as simple as that. Those are the three legs, if you will, to the trading stool. If you don't have those, you're going to have a hard time turning a profit. But if you have those, it makes life so much easier. So I really hope that makes sense. It's a lesson most traders never learn. And it looks like we're still kind of stuck in sideways mode today. So it looks like the market's just going to keep drifting a little bit. We're inside our trading range for the day. So here's the high of the morning, here's the low, and we're kind of right smack dab in the middle of that. We did get a bullish break, so maybe that will continue to the upside, but we'll see whether we generate a signal coming here out of the hard edge. But that's probably going to see more sideways action today. So I think we're going to button up the room here in a moment. If anybody has any questions, please ask away. And if not, we'll button up the room for the morning. Remember to check your emails. Like I said, I know there's a promotion coming, so you guys can get first dibs on what's out there. No questions? All right. Well, thank you very much for your attendance. I hope that it was at least a little bit informative for you today. DTS owners, I'm going to see you in the trading room again tomorrow morning. After a little bit of a sideways session like this, I think we might anticipate that the market's going to give us some sort of directional move tomorrow. If you are going to hang out and trade today, again, you got to look at this big overall trading range that we're kind of trapped in. It's looking something like this. And you're going to want to let it get outside of this range before getting too committed. I would almost venture a guess that the market's going to try to move higher. But again, that right now, that's just kind of a gut call. We'll see how it finishes out. All right, you guys, have yourselves a wonderful day. Again, DTS owners, catch you guys tomorrow morning in the trading room. Bye for now.